Good morning, good afternoon, and good evening, depending where you are on the planet. And welcome to the TGI. Thank God it's Friday, the 9th of December. Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. Last webinar of the week. Going to keep it brief. Going to run through what we've had, what we've got coming up, and take a look at the charts. A quick mention again. It's the last time I'm going to do it, I promise. If you missed the Trader Mind session that we did earlier this week, did it twice, but we did it originally on Tuesday and then again on Wednesday because of technology issues. But if you missed it, you can get it here. Go to Resources tab in the Members area, drop down to Trader Mind sessions. You get to this page here, and then you click in here, and it will play. Okay. So take a look at that. Well received. And as I said yesterday, people liking it. We had a good shout out on Trustpilot the last few days. If you can go to Trustpilot and give us a review, very, very much appreciated if you haven't done that already. So check out the Trader Mind session. And if you get a chance, go to Trustpilot. You can get to the Trustpilot page from tradeday.com. We go to tradeday.com at the end of tradeday.com at the bottom down here of the homepage. You can click here on Trustpilot and it'll take you through. Okay, would appreciate that. So, let's have a look at the calendar, what we've got coming up. Haven't had much, hardly anything. In fact, this morning from Europe, quiet session so far in Europe. PPI, obviously it's inflation data, so yes, it's important, big focus on inflation, as we all know, in the current world climate. But PPI hasn't really been doing too much for markets. Nevertheless, we're going to keep an eye on it. We have that in just under 1 hour. US PPI, core PPI, and headline PPI, both forecast at 0.2 for the month-on-month data for November. A little later on, this can sometimes move markets, actually. So, excuse me. We should certainly be watching it. Michigan consumer sentiment data, 10 o'clock Eastern time. So we have that coming up as well. Preliminary data for December. Do keep an eye on that. That can have an impact. It's always on a Friday. And so end of the week, people tidying up, looking for direction, going towards the latter part of the week. Sometimes that can give us some movement. So watch out for that. 5 things to start your day from Bloomberg. Yeah, basically focusing, first of all, on the PPI data. And then also does give a nod to the Michigan data that I've just mentioned. US Federal Trade Commission is seeking to block Microsoft's acquisition of Activision Blizzard, not really massively impacting on us. Some of the world's biggest events with that stocks will see low double-digit gains next year, which would bring relief after global equities have their worst losses since 2008 this year. So, futures are up overnight, having had a positive day yesterday. We kind of called for that yesterday, and we've already spoken about the data. So not much they're really focused on there on the 5 things to start your day. Stocks climb overnight, yields steady before inflation data. Yeah, covered that already. Nothing really too exciting there. China ended up having a really strong week on reopening hopes in here. So good gains for China, not really echoing through into global stocks and US stocks. But there is this kind of a little bit of a warning in the end of COVID threats that overwhelm China with infections, because they've rapidly moved away from this zero COVID, and the concern is that that rapid move without anything in place, could be negative for China with respect to infections and deaths. Chinese stocks will outperform global peers, though, Morgan Stanley have said. So a lot of positives coming out of China. But I thought this was worth noting. I'm going to share this link in here. So markets are obviously up over the last month or so in here. Certainly since October, we're up. Global equity funds see record biggest weekly outflows in 3 months over the last week. Obviously, we did have a little dip lower in over the past week, but considering we've been on a tear higher over the last 2-3 months, surprisingly, equity funds biggest weekly outflows for 3 months. So, markets, kind of this little wobble we've had. I mean, it's not been a big wobble. We'll take a look at the chart, right? I mean, I can just jump to the chart really quickly now, but it's hardly a massive sell-off in here. We did reverse the trend line. We did go down. So yes, we are down over the last week in here, but we have rebounded the last 24, 36 hours, and markets pretty much you would argue, flat in here since even though we had that impulsive move here after the Powell testimony a week or so ago. If we look in here, we're kind of flat right now where we are now. That's the last CPI data. We've got CPI obviously next week. There's the October release, September data release in October. Here's the October data release in November, CPI data. And since then, if you look where we ended, look, we're bang on right where we ended. So we're kind of unchanged in here over the last month. So yeah, I mean, the fact that we've had outflows, that's a positive if you're looking at it from a bull perspective, right? If you're a bigger bull, not necessarily for today, but if you're a bigger equity bull, the fact that you're getting outflows is a positive. Why is it a positive? It means then the market still remains or has got more underweight. Okay, so there's more funds to come back into the market. Futures head higher, edge higher ahead of PPI data. We know that already. European bourses, going to be a short webinar today, guys. And really not too much to say. European bourses pretty much flat for the CAC, the French CAC, and the UK FTSE, 10th down and a 10th up. So 10th down for the FTSE, 10th up basically for the CAC. The DAX is up about, the German index up about 0.5%. And US exchanges obviously had a decent day up yesterday and a slight follow through this morning. The Nasdaq's actually up nearly 0.4. The Dow just under 0.2, and the S&P about 0.3 in here so far this morning. I say not a lot to say in here. So we had that decent rebound yesterday. I did talk about that. We did call that one yesterday. Markets up higher and up already on the S&P above yesterday's highs. We did get a spike lower. So I kind of we were in here when we had the webinar. I was talking about going long maybe through this point here. And then we had obviously the market whipsawing here on the open, lower and then back higher. It came right just to get below this little internal trend line I drew yesterday. I've redrawn this trend line. We didn't have this trend line. This trend line actually comes off of that spike low from yesterday. But if you look at this little internal trend line I did have drawn, the market just spiked below that yesterday and then came back above it, and then that set us up. And you can see the market is respecting, even though we spiked below that trend line. I'm just going to move this across so I can zoom in. Even though we spiked below it there on the open in the first 30 minutes of trading here, down in the first 15 and then back above, you can see with that trend line here that I've drawn here, you can see the market then respected it again, going late in the session, just before, a couple of hours before the close, as we had a sell-off pre-close, and then the market rebounded into the close, and then overnight back higher, and then kind of look, you see kind of respecting it again. And even with this redrawn trend line in here off of the low, that's the low, yesterday's low after the stock cash market open, you can see the market, these two trends. Oh, excuse me, guys. Oh, sorry, I'm just going to take a drink. Sorry, guys. These two trend lines kind of coming together in here now. The one that was breached and the redrawn trend line, and you can see the market, moving away, coming back down on the overnight and moving away from these trend lines, and now impulsively moving higher. I'm fully expecting upside gains today, depending on PPI. Obviously, you see we've failed twice in here, and we're just breaking through now. I'd be putting the trigger long on this one right now. And it's the same with the similar to Nasdaq. Look, you can see the market. We had this little internal trend line I drew. We spiked below that, more aggressive spike below that, we're back above it. But look how the market defended it again at 7 o'clock last night. Sorry, that's 7 o'clock my time. Sorry. So that's 2 hours before the close your time in the USO. That's 2 o'clock Eastern. We spiked back below it and then rebounded and respected it. And that we're flirting back with this trend line. This trend line that was kind of breached in here. I think that is an important trend line. It's kind of breached, flirting with it and back above, pushing back above it. And look, if we get back above, I think just pulling the trigger up through the current high. The S&P's already broke. Up through the current high. Upside targets, we can easily add another 1.5% on these today. And there's no real strong upside targets on here. Really back up towards the impulse peak in here that we had from 3 days ago. So this is from Tuesday's peak. That's up at 40.14 on the S&P. And for the Nasdaq, we could be back up there as well. That is 11,846. So, those are potential targets going into today for those two. Will be a brief webinar, guys, but when there's not much to say, I don't believe in trying to say it. Okay. Here we go for the commodity markets. Gold, first of all. We said this has been resilient. It continues to be resilient and didn't see the sell-off that, remember, this is positively correlated with stocks, yeah? It echoes the stock market. There's the sell-off for the year. There's the rebound coming off of, in this case, we rebounded off the October low and then off the November low in here. And then the market kind of echoing, but not as negative on the setback in here that we saw this week. There's Friday, Monday. And then since Monday, the market's been kind of treading water and rebounding and now looking more positive on the upside. So it can only be bullish on gold in here, and less negatively impacted on the downside. We pointed out this small base that had formed already yesterday, and the market continues higher highs and higher lows, making new highs right now. Can easily see it back up to the peak up here till 18, 22, 23 going into today. Let's take a look at oil, and then we'll wrap. Oil, the complete opposite, have been very, very lackluster performance. Tried to rebound yesterday, very big failure yesterday. You can see rebound, complete failure at around the previous session's high, and now made new lows and sitting down on those lows in here. And we can see in here, there's the rebound. It just peaked above the previous session high there at 75. I think that was 38, and it went to 44. Is that right? 31, 31, and we went to a peak of 44 and fell to a new low, and then dead cat bounced sideways city down in here, unable to rebound. All the threat for oil for me still lower. Probably would be willing to wait now. Normally I try to get in earlier, but I'd be willing to wait for a break below the low because there's plenty of potential for downside here. Down through the current low. Here, if you want to wait for this one, 71.12, I think that is, as I remember. Yeah, 71.12. This one over here is 32. Down through those lows will then open up upside. And remember, this thing in here is easily moving, quite easily moving in here, like $4 or $5 a day. So, could easily be a $5, $5 below where we are now, going into today. Even a $3 target would be a good target for today. So, yeah. So, oil looking negative, gold staying positive, and stock markets looking positive as well. Oh, okay. Good morning. In the future, can you add the UB or the ZBT analysis? Okay, yeah, Lee. Yeah, I can do that now for you. Actually, I didn't hit return on. So let me take a look at that. I've got that as well. So we'll look at on the March contract. I think the 10 years probably is that so UB and ZB. I've got the ZN, right? Does that work for you, Lee? ZB. ZB the mini, right? You can do it on the mini. ZB. We're on the. Here we go. I can happily do that. Okay. So here we go. Markets dipped to rebound. I mean, clearly uptrend, right? I'm just going to do it on the 10-year rather than the 30-year. So in here, markets in here dipped and rebounded yesterday. High-level consolidation, I would class that as. Whilst below yesterday's low for me, this is all very much in the uptrend. So underlying bull theme very much intact in here. I'd have to draw it through there. Okay, so bull theme very much intact. You've got the more accelerated line that I can draw on the shorter term chart. So we're going to add that in as well. Let me get rid of get the full contract. And then we'll add that in as well. No problem. And it's only one, guys, if you do want stuff covered, obviously I have to be, and I can't go into covering stuff that not everyone's looking at, right? But I'm more than happy to cover when people are looking at. I know this is something that's traded, so and people look at. So for me, this is still underlying bullish. I know we're dipping lower. I know it's gone nowhere the last couple of days in here, Lee. But I mean, I think for me, this stays positive. So I'd be looking to buy any dip towards this yesterday's low. So yesterday's low 130.23. Any dip into there, but probably rather than buying the dip into there, probably waiting for the break back higher. So I would probably be looking in here and having the. I would probably be looking. Let me get rid of this trend line. 1 second. So I'd be looking at the smaller uptrend line that just comes up from the last few days. I'd be monitoring that as my support in here. So I'll be looking at this, okay? And it works pretty well in there. Oh, look, you're flirting with it right now. I probably want to wait for the, I know the Treasury, cash is open, but, look, it's flirting with that. So it's hinting at a topping pattern, okay? For me, whilst it's above that's low. If it breaks that low, I'm short, right? I think you have to be short because you've got effectively a 1, 2, 3, 4 point top, so like a quadruple top in here. So down through there for me is bearish, okay? So down through the low 130, is it 131.00? No, that's what I said, 23, right? Yeah, 130.23. Down through 130.23 is definitely bearish, okay? And then you quickly be down here, I think, down to this impulse low. So we're down here at 129.24. So definitely if it goes through there. However, I'm still inclined to be bullish in here, and I'll probably be stepping in to like a 5-minute chart now, depending on what kind of trader you are, and then trying to look at, any kind of looking for a reason to buy it back up through here. So then I'd be maybe zooming in and looking at this little internal trend line. So this is a 5-minute chart now, this one in here. So back up through here, certainly back above these peaks here and here. So up through above our top side, where are we? 131.08, no, 09, and 131.11. So through 09.11 will be more bullish. If you want to get in more aggressively, you go through the little counter trend line here. That's more like 131.05. So if you're aggressive, 05. If you're less aggressive, 09 or 11 on the top side to enter the long. I'd rather buy it as it goes back up. I want to see it confirmation, okay, on the top side. You just shorted ES. Okay. Good for you, Mark. I think I don't agree with that one, but you know what? That's what makes a market, right? It's two-way. There you go. All right then. I'm going to wrap it there, guys. I hope that was useful, Lee. Remind me if I come on again and don't cover that, to come in and cover the treasuries. I'm happy to do that going forward. It is a big market, and I know people do look at it. So, for me, it's still bullish, and then looking for the break above there. But as I say, if it abandons that low, if it abandons the low, then, certainly happy to be selling it as well. Yeah. All right. Okay, guys, I'm going to wrap it there. I'm going to wish you all a great trading day. Have a great weekend too. I'll be back with you with another bull versus bear webinar on Monday. Until then, take care and stay safe.